Hello and welcome to our reporting season Investor Spotlight, your shortcut to the results that matter. I'm Andrew Gagan. Well, Credit Corp's full-year profit has risen 16% to $94.1 million off the back of strong earnings growth in its consumer lending business and earnings from its US debt buying segment. The US division saw a 12% increase in collections and a 28% boost in productivity, enabling the group to secure a record $164 million investment pipeline for fiscal year 26. Credit Corp saying while market conditions remain uncertain, collection performance had held steady over the past 18 months and it expects further purchasing opportunities in the year ahead. Consumer lending profit after tax was up 31% to a record $54.3 million, with its loan book growth up 5% to a record closing balance of $466 million. The company has also branched out to begin lending in the UK and it's launched its Wizit digital credit card as part of a push to diversify earnings. It is guiding to FY26 profit of between $100 and $110 million, implying growth of up to 17%, and will pay a final dividend of 36 cents a share. Thomas Barreggi, the chief executive, joined us earlier and commented on the company's growth positioning.
We had very, very strong book growth in the 2024 fiscal year, and you'll see that the book only grew by about 5% in the year to June 25. So there has been moderating demand in our segment. I feel that that's a function of cost of living pressures and people endeavouring to sort of cut their cloth and not resorting to borrowing as much within our segment of the market.
Other stocks we're watching today, TPG Telecom will return up to $3 billion to shareholders following the completion of its fibre network and fixed business sale to Vocus Group. The $5.25 billion sale generated net cash proceeds of around $4.7 billion for TPG. It'll also offer minority shareholders an option to reinvest in new shares, aiming to raise a further $688 million. TPG also updating its earnings guidance to $1.7 billion following that sale. And Telix shares have plunged today after warning of higher operating expenses in the first half, shares hitting a one-year low. The company is saying its US operations have expanded significantly following a number of acquisitions, leading to operating expenses of around 36% of revenue in the first half. Tomorrow, companies reporting include REA, Charter Long Haul Whale REIT, Pinnacle, Centuria REIT, and BWP Trust.